What is going on, investors? Hopefully, guys are doing well out there. That is right. It is Friday, and it is time for the FAANG Stock Recap Show on the Investor Channel, where every Friday we recap all the major news of the week and the technical analysis for all the major FAANG stocks, including Microsoft and Tesla. And because Netflix had such a dramatic drop after reporting Q4 earnings yesterday, we will include them in today's show. I can't think of a more important FAANG stock recap show than the one we're doing today. Not only are we seeing every single one of these stocks at or below key levels of resistance, combo that with the fact that we're on the eve of earnings for all of these stocks. We're going to be reporting earnings within the next week or two. That should set up for a crazy next couple of weeks. We want to definitely be prepared for what potentially could be coming with all of these stocks. Let's start things off with Facebook. Started the week at 326, went all the way down to a very critical level of support, all the way down to $303 per share. Facebook is reporting their earnings on February 2nd. Meta Platforms, which is Facebook, explores enabling minting and selling NFTs according to a report. This obviously goes hand in hand with what Meta's vision of their future is, and that would be using things like NFTs and cryptocurrency in their metaverse. It's a natural progression for Facebook. Instagram is introducing a subscription model. Now, the company says this will help creators earn more money by offering benefits to their most engaged followers, like access to live streams and exclusive stories. The company, which is Facebook, said they won't get fees from subscriptions until late 2023 at the earliest. What is this showing me? This is showing me that social media has peaked in terms of usage, at least here in North America and in the United States. Because now what are they going to have to do? They're actually going to have to pay you to post. That's basically what this is. They're allowing you to monetize your post and actually sharing some of that revenue with you. That is showing me that Instagram is feeling the heat from a TikTok. It's probably feeling heat from other forms of entertainment and social media. So the way they combat it by actually paying you. I tell you what, I don't know if I would necessarily post these videos for free, but because YouTube pays me a little bit of money, it's not a lot, but they pay me a little bit of money to post these videos, and that is a great incentive. And I think it will likely work for Facebook. FTC's Lina Khan, this is the head of the FTC, she had an interview this week on CNBC, and she says they have a fierce sense of urgency to her job at the antitrust agency. I thought it was interesting. She pointed out the company just has, or the FTC has just 1,100 employees, which is 2/3 the number of workers that they had in the 1980s. So what is that really telling you? Okay, if the government was really looking to slap the wrist and go after these mega gigantic corporations that donate hundreds of billions of dollars to help these politicians get elected, wouldn't they bolster up the FTC with employees? Look, it's not their money, it's our money, the taxpayer. No, they're not. They've cut their workforce by 2/3 in the last 40 years. They don't really care. And so also her comments, and I'm not trying to criticize Lina Khan, but she did say that, look, they don't have very many employees. They're only able to go after the biggest deals. What does this mean? If you're not a billionaire, billion-dollar company, guess what? The FTC is probably not going to come knocking on your door because they don't have the resources to do that. U.S. antitrust regulators announced plan to review merger guidelines. What she talked about, this also relates to what Lina Khan was talking about in an interview. She talked about how she's really just got to kind of put it out there that maybe they'll come after you, maybe set forth some guidelines, maybe set forth some rules, so then she doesn't have to actually do her job with few employees that she actually has. We'll see what ends up happening if the government can scare companies away from big mergers. Again, as you can imagine, here on the Investor Channel, I'm a total free market capitalist. The fact that the government is in here playing politics and playing favorites, not necessarily the best thing for the economy, in my opinion. Moving on to Apple, started the week at 172. Oh my goodness, went down about $10 per share, down to about $162 per share. Apple reports next week on January 27th. Fortnite's Epic Games asked the appeals court, the Ninth Circuit of Appeals out here in California, to reject Apple's App Store decision. Now, this lawsuit got a decision at a lower court. This was a month or two ago. And for the most part, the court favored Apple to a certain degree. This is just probably standard legal procedure where they are appealing to a higher court. And I'll be honest with you, out here in California, you just keep appealing. You might find a set of judges that agree with you. Apple CEO Tim Cook spoke with Senator Ted Cruz for 40 minutes to discuss antitrust bill. So right now, there is an antitrust bill that has bipartisan, at least support to a certain degree in the Senate. And I think it's starting to move forward. And what is concerning Tim Cook to a certain degree is the fact that the bill does some light things in terms of regulation. It won't allow sites like Google and Apple to kind of favor their own apps and their own products and search results and those types of things and maybe pre-installed on the phone and the devices. What it also does, which is really interesting, this is kind of some next level discussion that I don't think you're going to find anywhere else, but what it's potentially going to allow to do is have game makers like Fortnite, have other app makers, maybe even like a Facebook and Google and other companies that are trying to get onto the iOS platform without having to pay Tim Cook a 30% royalty on every sale that goes through. Well, the bill that's going through Congress would actually allow workarounds. And so Tim Cook's concern is, well, look, we have a lot of protections on our devices that's not allowing you to be tracked anymore. Obviously, if you've been following online advertising through Facebook, through Google, through Snapchat, through Pinterest, they have really struggled over the last 6 to 8 months after Apple implemented some privacy changes that didn't allow you to track. Well, if all of a sudden Apple's ecosystem gets opened up through regulation, well, guess what? Maybe you're going to be able to track people a little bit easier because you're not having to be funneled through Apple's privacy kind of network and security in their phones. So this could have a two-pronged effect. Number one, it could open up online advertisers like Facebook, like Google, and like others to be able to track users better. So there could be some unintended consequences in this bill that's meant to be, it's for your protection, it's for your privacy. But what it may end up doing is actually opening up some privacy loopholes that have actually been closed by Apple. That was the majority of his discussion with Senator Ted Cruz. We'll see what happens. That's a really interesting bill that's making its way through, and we'll see what ends up happening. Like a lot of government regulation, there's always side effects that often benefit big business that weren't foreseen in the initial bill. Apple's iPhone SE with 5G is set to launch in April or May. This is according to a report. This is a similar device that they've made. It has a 4.7-inch display, a home button with Touch ID. It's basically kind of an entry level or a low-end phone if somebody doesn't want to spend $1,100, $1,200, $1,300 for one of the high-end Apple iPhones. Well, they're able to get into the ecosystem for a couple $100 on one of those Apple iPhone SEs. Now on to the absolute, other than probably Netflix, the absolute disaster from a technical perspective is Amazon. Started the week at 3,234, and if you've been following this show, you knew that about 2,900 to 3,000 was a critical level of support. And unfortunately, if you're like me and you're overweight Amazon, your portfolio got obliterated this week. This stock is down to $2,852 per share. I'll talk about if I actually bought the dip on this one. Amazon is reporting their earnings on February 4th. Amazon is to open its first clothing store later in 2022 out here in Glendale, California. Now, I actually saw this was expected to be like a big department store, okay? And it has everything from the $10 basic, kind of t-shirt and jeans, all the way up to like $400, $500 designer stuff. So it's going to be kind of a maybe think of like a Macy's, okay? You could probably find a $10 t-shirt in Macy's, and you could find a $75, $80 one from a designer. And so look, this could be Amazon's way of moving further into physical retail as they dominate online e-commerce to a certain degree, okay, especially here in North America, not worldwide, but out here in North America, they dominate that to a certain degree. So where's their next layer of growth? Where can their next layer of growth be? Is actually start dominating physical retail. Amazon and Sony are most likely to do video game deals or acquisitions in the wake of recent M&A. We saw major mergers and acquisitions this week and last when Take-Two Interactive agreed to buy Zynga, and obviously later in the show, the big news of the week, Microsoft agreed to buy Activision Blizzard for like $69 billion. So industry experts are expecting that Sony and Amazon, also kind of big in the video game space, Amazon to a certain degree with the actual physical games, but not a lot of people realize Amazon actually owns the #1 streaming platform for video games in terms of entertainment, which is a YouTube-like Twitch service that is extraordinarily popular with video game enthusiasts. Moving on to Netflix, started the week at, is that right? $519, and today alone, this stock went down $110 to $397 after reporting earnings yesterday that were a complete disaster. Now, the company did report that they had added 8.28 million net subscribers, but the company had forecasted to investors that they were going to do 8.5 million subscribers. And in the upcoming quarter, so off a quarter where they added 8.28 million subscribers, now they're planning to just add 2.5 million in the upcoming quarter, and that sent investors fleeing for the hills. This is one of the reasons why we kicked Netflix out of the FAANG Stock Recap Show. Number one, I got a ton of comments and suggestions. Look, I read the comments, I read what you guys say, and I try to tailor this channel and the content towards what the stuff that you guys like and you talk about. And so that was one reason. The number two reason is Netflix is one-dimensional. They rely strictly on subs, okay? Yes, you could say the same thing with Apple. They rely strictly on iPhone revenue, and you could say the same thing about Amazon and Facebook and Google. They rely on online advertising. Look, I get it. Most of these companies have their one lane, but Netflix lane was so narrow that any deviation to one side or the other, and we saw that this stock crashed and burned. You can view my video to Netflix if you go to my channel. I posted a video of Netflix. I won't get into it because it seems like a lot of people viewed that video. If you do want more information on Netflix, I posted about a 15-minute video on the company yesterday after their earnings. Moving on to NVIDIA, started the week at $267. This thing, broke critical technical level when you go by about $30 in 1 week. You went down to about $233 per share. NVIDIA reports last out of this group on February 18th. Not a lot of news out of NVIDIA. Moving on to Alphabet or Google, started the week at 2,781, and you guessed it, it broke a very critical technical level once it got below 2,700. The stock ended the week at $2,604 per share if you include after-hours trading. Google reports their earnings on February 2nd. Google is pushing to dismiss most of the state's ad antitrust suit. This has to do with some bidding strategies that is alleged that Google kind of drives up the prices. Look, I just looked. I spent $30,000 in ads last month. And yeah, it wouldn't surprise me if these companies squeeze a little bit money out of us that buy ads on their services. But look, this is just kind of through the motions of the legal proceedings. This is something that is often done. They file to throw out this lawsuit. What happens here? Who knows? My guess is they'll have to pay some kind of fine. Speaking of fines, Google appeals a 2.4 billion euro. I think that's about $2.7 billion fine from the Europe's top court. This has to do with the fact that Google broke antitrust laws by favoring its own comparison shopping ads over other services. This also has a little bit to do with the legislation that's working its way through Congress. There's some language in there that says that, hey, Google can't, favor its own products or favor companies that it has deals with and those types of things in order to show ads to an end user. Again, this is likely just legal proceedings. Google's just trying to delay having to pay this fine. My guess is they'll probably have to pay it at some point. Google is working on a new augmented reality headset, and I thought this was interesting, not by any imagination. Look, everybody's working on an augmented, headset at this point. But what we got to remember about Google, they were actually the first into this space in 2012. I remember Sergey Brin, I think, who was more in charge of Google at the time. He came out with these Google glasses, and everybody kind of, slashed on them and just thought they were ridiculous. Well, now it's looking like they were way ahead of the game. They were like 10 years early. So I would actually thought it would have been cool if Google had been working on this the whole time, but they actually shelved the product for several years. But what we got to remember about Google is, first of all, they were first to this market, kind of the AR, VR, headset kind of glasses thing. But what also we got to remember is they own the Android platform, which is extraordinarily powerful and which is a great base to work with this type of software and these types of designs. Google is to launch a beta to bring Android games to Windows PC. I think based on what we saw Lena Khan talked about, obviously these companies want to keep regulators off their back to a certain degree. We're seeing maybe a little bit of political will to pass something that will threaten these companies to a certain degree. And so it could be that they start to work together. These kind of announcements where, hey, you can play Google on Windows and you can play Activision on a Sony. Those types of things could keep regulators off your back to a certain degree. Moving on to Microsoft, a stock I bought several times this week. We'll see if that ends up being a good idea. Started the week at 306, peaked up a little bit, but then came down. I tell you what, if you're a trader in this market, you love this, okay? I mean, we're getting some pretty big swings in the market, and actually is cool to see. It's fun to see. End of the week at $295 per share. Microsoft is reporting first next week on January 25th, just 4 days from now. Microsoft buys Call of Duty publisher Activision for almost $69 billion. This will be an all-cash deal, I believe. They might, finance some of this through debt, but this wasn't where Microsoft would buy Activision for a certain amount in cash and then, issue some Microsoft shares to give to shareholders of Activision. No, this was a straight cash deal, and you're going to get cashed out if you own Activision Blizzard shares to the tune of $95 per share. What's interesting is at the current moment, Activision shares are trading about $14 lower than the agreed upon price. So they're showing you there's some market skepticism here to a certain degree. Also, you probably have a little bit of selling pressure. Once deals like this get announced, you have people that are willing to sell their Activision shares to just kind of get out of them. And you also don't necessarily have a lot of people willing to come in there and buy, because we're over a year away likely from this deal actually being approved and finalized. And so that's a long time to, tie up your money for essentially $14 in upside. My guess is you get to the closer end of this deal, you start clearing some regulatory clearances. Well, the Activision Blizzard price will start to move up because you'll have kind of like price arbitrage people coming in there and wanting to bid that up. But this puts Microsoft squarely in one of the top video game makers, not only with their Xbox console, but Activision Blizzard makes Call of Duty and many, many other popular games. This is an absolute match made in heaven. If they can get that by regulators, that is absolutely fantastic from a video game standpoint for Microsoft. Activision's current CEO says Microsoft is committed to retain workers. This is obviously something they have to say as the company is transitioning to a new company, and Microsoft trying to say, hey, we'll keep some of you. It's usually the higher end executives like the CEO right here. He's going to get the boot. They don't need two CFOs. They don't need two CTOs. They don't need duplicates of some of this upper end management. That, in fact, that's where you see some cost synergies. You get rid of the guys making a couple $100 million. Sure, the developer that's making 150,000, yeah, you're definitely going to want to keep them on board, but kind of that middle and upper tier management, sure, you give them the boot if you're Microsoft, and you tie those costs into the purchase price of Activision. Moving on to Tesla, start of the week at 1,033, and oh my goodness, we broke a key technical level on Tesla. I think it was at 960. We'll see here shortly in a second, but they ended the week at $943, $941 if you count the after hours trade. Tesla is reporting next week as well, 5 days from now, on January 26th. Tesla and other electric vehicle makers see more support for tax breaks in India. On the EV stock show that we reported last Saturday, I noticed that India has like a 100% tariff on automobiles coming into the country. So it makes it incredibly difficult to sell vehicles into the country. India's obviously leveraging those tariffs and those taxes to get companies like Tesla and other automakers to actually manufacture the cars there in India, which is, look, I'm not going to argue with what India's government is doing for their country, okay? I don't live there. It's their country. They have that ability to make those decisions themselves. But Tesla is trying to loosen the regulations to a certain degree, and we see if they will. India is obviously a densely populated country, country, and it could have a massive impact on Tesla's financials if they can eventually break into India. Moving on, Tesla is on the road for 1.5 million deliveries this year. I would say that's probably on the low end. We just came off a year where they did about 900,000 and change in vehicles, and we have Giga Berlin likely online by March, and we also have Giga Texas likely online at the similar time frame. Both of those facilities likely are going to be able to pump out 500,000 vehicles for a full year. When you look at maybe a quarter being taken off of that, those companies, or those gigafactories, should be able to produce, I would guess, 400 to 500,000, maybe even more than that, just on their own. And so, yes, I think Tesla could easily get to 1.5 million vehicles. I've seen upside to about 2 million vehicles over at Tesla. Moving on to the all-important technical segment of the show. Again, we are at critical levels technically on all these stocks. Some, like Amazon, we've actually broken through that, okay? And we are on the eve of earnings. I mean, buckle your seatbelts, because we could see some major price action. We saw it this week with Netflix. If you get any disappointment or any upside, these stocks could swing like we saw with Netflix. I think Netflix was just kind of the precursor. We could see some major swings in the next 2 weeks in these FAANG stocks. I would watch them extraordinarily closely. Now, Facebook is at a level we're watching extremely close. I don't move these lines around. We could probably bump this green line. I make these lines green because this is a key area of support, and now I will extend it. It's literally right there, right at $303 per share. Those are the previous highs, acted as some support here, acted as support here, and it is acting as support here. If you break this 303, you are coming back down into our previous area of consolidation. I mean, all the way on the low end, all the way down to about $250 per share. So you got $50 in downside. If this thing disappoints next week in earnings, this thing could get ugly. Actually, 2 weeks away for Facebook in earnings on February 2nd. Moving on to Apple, this stock also broke, I wouldn't say a critical area of support. I have these lines, kind of these thinner blue lines. I'll talk more about the color coding that I'm kind of working with. I have a new charting software that allows me to do kind of this stuff. The thinner blue lines is an area of support, but I wouldn't call it critical. With Apple, our critical level of support were the previous highs back down here at 157. I would say we have a strong probability of coming back down here very shortly, maybe even before earnings, which again is 6 days away for Apple on January 27th. I think we've got a strong possibility to go from 162 down to 157. And based on those earnings, and probably more importantly, guidance with this one, if we break this 157, I think we're coming back into our sideways consolidation zone, which was basically where we're at for the history of this channel, between about 138 and 149. That's significant downside still left with Apple. Moving on to Amazon. Ooh, this is so ugly. Oh my goodness, look at this big green line. Okay, when you got, we don't move these around, okay? I move them when we do our show, okay? Unless I do a video on the stock for a given reason. But we notice that Amazon, since July of 2020, I mean, we're almost going on to, not quite, but basically a year and a half, this level at 2,900 held multiple times. And in fact, we were pretty well above it, and we were well above kind of this thinner blue line, but look at these red candles, and this is really, really ugly from a technical perspective, because there's not a lot of candles to support this stock over here. Amazon better not put up a stinker on their earnings or their guidance, because this stock could go way lower. I mean, we're talking, oh my gosh. I mean, we're talking down to maybe $2,000 per share. This is where you have like some actual level of support underneath where the stock is right now. The stock is at 2,700. And if it puts up a stinker on earnings, it could easily, we're talking easily come all the way down here to about $2,000. And not necessarily in one day, but when you turn negative like this, it is really, really bad. Now, we could find some footing here. We put up amazing earnings, amazing guidance. This thing could rocket up. Do I really want to gamble in that sense? Not necessarily, although I will say this did trigger a buy in my son's account. We're talking 30 or 40 bucks. That's all they had in their accounts. I did buy for my sons at this level. We'll see if that ends up working out for them in the shorter term. In the longer term, Probably will, in my opinion. Moving on to NVIDIA. Oh my goodness, I'm going to change this line to green because this is our key level of support with NVIDIA, and we'll make it the thickest green line. This line right here at 230, I have it marked out at about $231 per share. The stock's at 233. We are at a critical level with NVIDIA because not only is that green line our level of support because it's our previous areas of high, but also this uptrend line, this blue line right here. This line is an uptrend, and I don't care how you draw it in here, we're touching both of these lines. We break through this area of 232 and you're coming south of $200 on NVIDIA. So there could be some buying opportunities with NVIDIA. Again, keep in mind, NVIDIA doesn't report until February 18th. Moving on to Google. Oh no, just like Amazon, we had this green line marked in here. Even if you want to push it down to, I mean, you could push it down to here because there's a small little gap here. Sure, if you want to do that, if we want to be like really optimistic, it is sitting on a level of support down here at about 2,600. I previously had it closer up here to 27. I actually think it's safer to keep your levels of support a little higher, just in case some of you want to preserve your capital. You're closer to retirement. You're just new into the market. Maybe you're going to use this money to buy a house in a year, 2 years, those type of things. Everybody has a different time horizon. Okay. I come to you with a 20-year time horizon on these stocks. I invest heavily into my businesses. I spend tens of thousands of dollars a month into the small businesses that I run. And believe me, they're small businesses, but I do invest in the stock market, obviously. Okay. It's one of the things I love and very passionate about, but I have a 20-year time horizon. So as this stock works down, I'm not really that concerned, but some of you out there, again, maybe you're saving up to buy a house. Maybe you're saving up to pay off your college loans. Maybe you're closer to retirement. Those types of things. These are the levels you really, really need to think about setting some stop losses and having that discussion with yourself this weekend, more than likely, because if we continue to go lower on Google, we don't have, again, this stock was on a monster uptrend. And once you break that trend and you start going down, well, it's trying to find an area of support. The only firm level of support I see is all the way down, way down here at about $2,000 per share. That's $600 lower than where the stock is. You have a cluster of sideways consolidation. Now, I will give you some hope here. Okay. I think what's happening with a lot of these stocks is very similar to what we saw with the March lows. Okay. March of 2020. Obviously, we know what happened during that month here in North America. Every single stock, virtually outside of maybe some of the stay-at-home plays, took a major dump, but then they rocketed up. And for the most part, outside of Google, this might not be the best example, but if you pull up a chart of Amazon and Apple and Facebook, a lot of them went sideways for a little while. Okay. And so I think that's kind of what we're going to do with these stocks, but we don't know where they're going to bottom out, but eventually they're going to bottom out. And then I think we find our sideways consolidation. We find a range, but there can be some pain in the meantime before we get to that spot. Now, moving on to Microsoft. Ooh, this one's ugly. I bought this one several times here at the 300-ish level, and the stock looked like it wanted to hold there. I have another upper trend line here, this blue line. This was looking like it's wanted to hold. I think it's actually better if you push this trend line up into here. I mean, that's the thing is with these upper trend line, I'm just going to delete that because you can draw those in anyways, and it can tell you any kind of story that you really want it to. It's really critical that we broke through this green line. In fact, we not only broke through it, we put up a big old red candle here as well. So now what's that's telling me with Microsoft is we're now back down into this sideways consolidation zone, which really didn't last that long, but you got the downside down here at about 280, upsides back up to 3. If you break through up through 3, it's just showing you this was a temporary breakdown. Now, really, really bearish on Microsoft is you break through 280. If they report earnings next week on January 25th and they break through this 280 level, oh my goodness, you're coming way down. You're probably coming 250 on this stock. It's going to be really, really ugly. So keep that in mind as we move into next week, depending on your time horizon, your level of risk, the kind of risk you're willing to take. Some of you, heaven forbid, are trading on margin and have that type of exposure to this market. You really, really got to think about this stuff. And certainly if I was on margin, if I was close to retirement, I would be hitting that sell button and really taking off a lot of risk. Okay. When you get to these critical levels of support, okay, it's a high level of risk. Okay. My long-term in view my long-term investment strategy, I actually get excited at these moments. This is when I'm thinking, oh, do I need to deposit more money into my account? Do I need to sell something so I can put more money into my retirement account? Those types of things, put more money into my brokerage account. But again, keep in mind, these are high levels of risk. Now with Tesla, it's actually a little bit better story than I thought. Our previous highs are actually here at about 900 per share, and the stock's sitting at 943. Something happened with my upper trend line. It really got kind of blown up. We're just going to take that out of there. We don't need that anyways. So Tesla's doing okay. Tesla's not something I would be super concerned about. Now, it could open up on Monday or Tuesday and get down lower than this. I would call it about $900 per share. You retest this, I wouldn't be super concerned. You break through this, I would be concerned. You're probably coming down south of, I would say maybe even south of $750 on this one. Tesla does report on January 26th, but keep in mind, we already know the delivery numbers. We already know the mix of the vehicle. We can already kind of estimate their profit margins. It's really going to be product updates. I think Elon Musk promised on Twitter he was going to give an update on the Cybertruck and maybe the $25,000 car, maybe the Roadster, other types of products that they're working on over at Tesla. That I think will move this stock more than anything. My guess is on January 26th, I'll probably wait till even after the earnings call to actually post our Tesla video unless I get a kind of a clear sense on what the market thinks after they report their earnings. But right now, I'm not super concerned with Tesla, because what Tesla could do is come all the way down here at about $900 and then just bounce up like it has and then just continue this sideways chop. It could be that Tesla just chops between about $900 per share and up here to about $1,000 or $1,200 per share. That would not at all, that would be extraordinarily healthy for this stock if it chops sideways for a while. And I actually, this is what I'm predicting at some point with FAANG, because we know how much cash these companies have. We know their sales. We know their dominant position in their market. These pullbacks create buying opportunities for stocks like this. It doesn't create buying opportunities for the whole market. It doesn't create buying opportunities for the Cathie Wood, unprofitable, overvalued tech stocks and high-flying stocks and overhyped stocks, but it does create buying opportunities for some of these stocks. I think at some point we're going to sideways chop. I would actually wait until we see evidence of that, okay? Because the whole market could turn negative. You get Google breaking this critical technical level. You get NVIDIA breaking its technical level. You get Amazon already breaking this level. Again, if they report earnings and a poor guidance, ooh, this one could get really ugly very quickly. Same thing with Apple. We're approaching a key technical level, and Facebook, we're literally square on it right now. All of these stocks are worth monitoring heading into next week. If anything major happens, I will step in and do a video similar to this before the Friday show, but keep an eye out next week. We have Apple, we have Microsoft, and we have Tesla earnings, and be sure to tune into the channel for those videos. Hopefully you guys enjoyed today's video. Leave me any questions or comments down below. I'll try to answer them over the weekend. Good luck with your investments.